year and the year following. Now, why they're expecting that? One, Jio is focused on growth. Remember at their AGM, Mukesh Ambani said that he plans to double Reliance Jio in the next 3 to 4 years in terms of revenue. So for the company of that size to double, they will need tariff hikes. Secondly, even Vodafone Idea continues to lose market share. So if the company has to meet its cash flow requirements on a declining subscriber base, they will need more tariff hikes. So they believe the environment is constructive for multiple tariff hikes from here on, and Bharti Hexacom is best placed to play the increasing tariff game, and they're factoring in a 19% revenue growth, 25%, 66%25% EBITDA growth, and a cash flow jump of 66%. On Airtel too, Jefferies has raised the target price to 1970. Back to you.
All right, Rima, thank you very much for that. So keep an eye on all those names. That's the opening bell going off. What do we have in terms of first rates? It's a flattish start and almost immediately in the red. So 25,370. So around where we left off yesterday is where the start is at. Since it's like a traffic light. I mean, 82,925, basically just blinking and changing color. But yeah, I mean, maybe a little more decisive. 25, 30 points down on the Nifty and about 70 lower on the Sensex. Nifty Bank is absolutely flat for now. Mid-cap index has got a bit more green, 0.25% higher is what you have. So that's the overall picture. I think there are more down than up on the Nifty. The heat map is coming up on your screens. And yeah, I think there is, there should be about 20, 22 names which are higher, but there are, a few more which are lower as well. So the start is mild, subdued, and it's a Friday going into a weekend. 50 points now, 40, 45 points now after yesterday's tremendous stage. So actually, from yesterday's high now, this is a full 120 odd points, 130 odd points lower. But this is the first few seconds of market open.
Prashant, well, I'll tell you what the most exciting stock, the one that Rima was just talking about, Bharti Hexacom. The market has really taken note of that Jefferies report and the kind of higher price target, substantially higher price target that they have. Stocks jumped about 6.5% right at the open. We'll get to more newsmakers in just a bit. But first, on the Nifty, the traffic lights that are blinking red and green, as Prashant says. Well, on the green side, there's Bajaj Auto with a gain of about 1%. Hindalco, Tata Steel, JSW Steel. So all the metal stocks are having a good open, up about 1% each. Wipro, Nestle India, and TCS. These are some of the other names on the way up. And then it starts completely fizzling out. On the lower side, there's Divi's, which is down about 1%. Some cool off on Asian Paints, Adani Enterprises, Ultratech Cement, Coal India, Bharti Airtel. So Jefferies also optimistic on Bharti Airtel, but that call is not really reflecting that much. It's Hexacom where the target price is much higher than the CMP, which is why the market's excited about that particular call. And then it's very, very flat out there. So not much moving on the index. It's far more about individual stocks. So let's get to it, Mangalam.
Individual stocks, 1,400 stocks, 1,500 stocks now as we speak, advancing for just about 500 stocks which are declining. So market breadth firmly in favor of advances. Among the top gainers in the F&O pack definitely are the gold financiers. Gold prices hit a record high yesterday. So Manappuram and Muthoot doing extremely well. Metals also doing quite well. So we have Nalco and Vedanta, both of them sitting with gains of almost 2.5%. Z Entertainment pops up on the gainers list, but on the losing end, we have Samvardhana Motherson. Brokerages, have downgraded the stock. Vinny just spoke about that, down 2% right now, and Granules is the other one. After a 16% downtick yesterday, the stock entered F&O ban, and that follows up with a cut of almost 3.5% on the way down as well. On the way up, though, apart from Hexacom, which should be pointed out, we have Edelweiss Financial, which is up around 8%. We're seeing some traction in Puravankara as well. They bought land in Breach Candy, Bengaluru, as well as Lokhandwala. So all those factors playing out for Puravankara, up around 4.5%. Tirupati Balaji Agro, listing yesterday, which gained about 14-15%, has now followed up with a 5% up move on that counter as well. And as we speak, the Patanjali large trade has taken place already. Nearly 1.2 crore shares or 3.3% equity changing hands. Patanjali Foods down 3% at the open on account of the large trade where promoters have looked to pair stake, and that's what we gather from our sources.
Godrej Agrovet, guys, is the biggest volume-led gainer right now. And we don't see that on the volume leaderboard, but it is coming up, 815 now. I think you mentioned some of the others, Varun Beverages, Bharti Hexacom. Nalco is coming up with a 3% pop as well. Nalco at 185. And look at Edelweiss. I don't know if you guys mentioned it. Edelweiss at 124 is up 9%. That's a surge. Edelweiss is a large mover. And by the way, it's done very well. Last 3 months has been phenomenal for this one. So it's almost now a 10% move. Backed by volumes. That's the only reason I'm mentioning this here. Lodha is up about 3%, 1,234 on Lodha. There is IDBI, which is up 4. So stocks at about what 91. Saxoft is up about 6%, 6.25%. I mean, this small jeweler, Moti Sons, last few days has been buzzing, and I think for the week now it's up about 32%. So that's doing well. Yatharth is up about 3%. Yatharth Hospitals, that is. So decent volumes. Viatech Vabag, signs of life this week once again. I think for the week it's up about 10% and 4.5% today. Tribhuvan Das. I mean, actually, some of these older, smaller jewelers, that is TBZ, 3% on this one as well. So that's a theme which generally is done and worked out very, very good. On the downside, Granules, Patanjali, Motherson, I think we mentioned most of these. Kim's is, okay, I think there is a corporate action there. Inox Wind is down about 2.5%. PNB Housing has been a big re-rating candidate, right? 800 to about 1100. So about just under that level right now. Fluorochem, Adani Power, Asian Paints are some of the other volume-led losses, but nothing large. Between 1 and 1.5% is what we're talking about. 40 points lower is what you have. Rahul Arora is with us, CEO at Nirmal Bang Equities. He's with us here in our studios. Rahul, great to have you with us here. Thanks very much. So, I mean, just a quick word on yesterday's session, if you want to weigh in. I mean, you don't see those very often. I mean, I'm not making too much of it, but it was a big deal, right? I mean, the kind of surge that we saw, and especially the data on the option side and what has happened. And I was saying earlier that all that talk of, these foreign algo firms yanking markets at will whenever they want, I think that's going to come back. That's going to resurface. And we don't have any evidence. Well, that is what happened yesterday. But sure enough, I think a lot of call writers got killed.
So first off, morning, and thank you for having me on the show, and festive greetings. So I think everything that's happening, let us submit to the divine. Ganpati Bappa Moria. But no, I think on a serious note, Prashant, I think one is obviously the data that you're talking about. The second is, I think, I think ever since Ashish of Axis Mutual Fund wrote that note about promoters selling and, the kind of corroborating it with the SIP inflows. I think if you look at the last 2 months...
his note on derivatives, because he wrote one on that one as well. The size of derivative market options, etc. But go on.
True that. But I think if you see the last 2 months, right, I think if you look at promoter selling, it's about 85,000 crores. That's 2x the SIP money that's come in. The question is, where is this money going? And I think, Prashant, you've been in the market long enough to know that there was a time when promoters sold stake, the stocks used to get derated.
Yeah.
Here, there is a queue. Ki mujhe pehle milna chahiye. And which is very surprising. This is a huge shift. And now why is that happening is because of the force of liquidity. I think, the kind of money that mutual funds are sitting on, and we've discussed this, I think, by all stretches, I think if you include mutual funds, AIFs, PMSs, family offices, and you look at cash levels, there's about 1.5–2 lakh crores of cash at any point in time in the system. That's 1/3 of the size of the mutual fund industry pre-demonetization. I mean, that's the magnitude of what we're talking about in terms of liquidity. So you have a counterbalancing force. I think, the other day I was talking to a slightly senior sell-side person from our industry, a much bigger competitor of ours, and I was like, how is the Asia-Pacific region going? He's like, abhi yaar, Asia ke trips itne kaun maar raha hai jab, SBI is 10 lakh crores, iPro is 8.5 lakh crores, HDFC is 8 lakh crores, and, Kotak and Birla. So the kind of depth that the domestic markets have seen, I think to just play on the word that you've got, I think the FI money is an option value in the Indian market, so to speak, right now. And I think I heard you spotting some of the real estate stocks. I think that promoter selling money is either finding its way back into the markets or it's going into real estate and high-end real estate. I think if you see the kind of sales that even high-end real estate is doing. Now, do valuations concern us? They do, at a broad level, honestly, Prashant. I think we just got lucky that crude has traded between 65–70 for the last week, 10 days. The external sector in India has been good. There's no question. Our rupee has behaved itself. Crude has behaved itself. And our forex reserves are perfect. There's nothing really wrong with that. We are staring at interest rate cuts. How much, we don't know. But even then, are we justified for a 25–26,000 Nifty? I'm not so sure. So, hand on heart, I'll give you a final data point. If you ask all my analysts, hand on heart, to look at the last 3 and 5 years PE averages and project growth over the next 2 years and ascribe a realistic multiple X liquidity, my sense is 80% of my stocks under coverage, and we track about 180 odd, will be sells. That is just, I'm being very honest upfront on national television that this is what it will be. We don't know what to do with this liquidity. And so therefore you are only doing two things. Either you're constantly rolling forward, or then you're saying, forget the conventional PE and EV EBITDA and start doing DCF. Now, once you do that, how can you project cash flows in certain businesses beyond a point? Consumer, I can still understand. So there is a certain level of irrationality, and which is why when I was last on the show, I think a month and a half back, we discussed our downgrade on defense. We couldn't understand it. Some of our competitors still have buys, and good luck to them. But sometimes when you don't understand it, reason has to take over liquidity at some point. So I would advise people to be cautious at this level.
Rahul, just earlier we had Arvind Sanger of Geosphere on the show, and we were having the same issue, the same discussion on liquidity, right? And I was making the point on Bajaj Finance just being a simple case in point that a company goes out to the market to ask for 6,000, 7,000 crores. The market wants to hand it over 3 lakh crores, right? That's the sort of situation we're in, and also the company that Bajaj Finance obviously is. Now, your conversations with some of your foreign clients, I know they're no longer maybe the hottest clients as you say, but what's the sense there? Because till the time this NASDAQ rally continues, I think it's fine because they'll still keep looking at the home market. The day that starts petering off, they will remember markets where they don't have adequate positions built, and India is probably one of those markets. So what's the chatter you're hearing on that side, given that we're getting to the rate cut next week?
No, so I think should be the one clear directive that comes when you speak to any investor anywhere is India is still growing at 6.5–7%. That's still a remarkable growth rate by any stretch. I do understand our aspirational growth rate could be 8 to 9%, but at 6.5–7%, you're gold. And I think add to that, when you're talking about interest rate cuts that you've seen, you are going to see a little bit more of the yen carry trade unwinding a little bit as we go forward. I think if you look at the way the yen's been behaving, it's not, I think that one-day trigger is probably going to repeat itself, maybe not with that level of magnitude, but I think India could potentially be beneficiaries going forward. Now, if you heard that Trump
more
was...
money, which
absolutely.
Brings you back to the question, how are we going to deal with so much money?
Like I said, Survi, I think what's happening is that industry leaders are getting outsized in terms of valuations. And I'm not even talking large caps. I mean, look at Indian hotels and hospitality, look at Dixon Technologies and EMS, you can look at hospitals. I think what's happening is that the industry leader is becoming disproportionately larger. Look at IT services. I think look at the difference between TCS and the rest of the pack. You have TCS at 30 and you have Wipro at 20. So there's a 33% difference, and this is a large cap name. So, I think that's probably what's going to happen. But I think India could potentially, I don't know whether we will get a disproportionate share, but I think the one thing that the last debate between Harris and Trump taught us, I don't think either of them are too clear on their policies. So if that happens and you will get into a situation where obviously one of the two is going to win, but if they're not very clear on their policies, and I think you have a market like India which is going to go into an interest rate cut cycle with 6.5% growth. But I go back to the point I was making to Prashant, Survi, I still don't think, see, India's earnings are going to be driven by top line. Everyone's cut employee costs, everyone's cut subcontractor costs. They've squeezed every bit out of margins from crude. You've built up low-cost inventory. India itself, when the Russia-Ukraine war started, built up inventory at 40, 45. Your growth has to be driven by top line, earnings growth as well. That visibility, as when we talked to a lot of, I was with V-Mart Retail the other day also, he said, itni visibility nahi aa rahi. 13-15% ka growth top line mein aa jayega, which means you're talking about a 14-15% earnings growth. Now for that, do you want to be paying 23 times to the Indian market, 22, 23 times? But then again, as somebody very famous once said, markets can remain irrational far longer than you can remain solvent. So.
Well, you did speak about the point that the leaders will get disproportionately rewarded. What's also happening, the counter to that is that because leaders are getting disproportionately rewarded, now people are looking at the valuation gap between the leader and the significant other. And as a result of which, we've seen a big rally in the others down the quality line as well, not necessarily, as good as the leader. Jewelry sector, that stands out in particular. The last 1 year or so, Titan has underperformed. 2 years ago, Titan was trading at a 3 times premium to say someone like a Kalyan. Now that premium is just about 10%. How do you play this now? Do you stick with the leader because the premium has come down, or do you stick with the other one because on a low base they will grow faster?
So I'll tell you the first thing that comes to mind, Mangalam, when I look at historically how investors react to valuations. they will play this valuation gap, but at some point it will revert to the promoter that they are more comfortable with. That literally just happens. I think the determining factor, the single most determining factor, and which is what we're taught in school as well, that beyond a point, the valuation that you will be paid for is for return on capital employed. How you are basically employing your capital, how you are rewarding your shareholders. So that valuation gap can play up to a point. But let's take IT services as an example. Wipro hasn't re-rated to that extent as say a TCS or an Infosys has, right? Persistent has always been at 40, 45 times. There have been some ER&D players who were at 20, 25 times that have caught up, but the valuation gap still remains at about 30 times, so 30% between them. So I think from here, you look at prudent capital allocation. You know, there have been some companies, and I don't know how actively you guys track this, but a lot of companies that have come up with IPOs, if you look at their objects of the issue, not all of that money has got deployed as well.
Right.
You know, sometimes I wonder, you know, on a lighter note, whether some of that will also find its way into the capital market and they'll make the returns and they'll increase the dividend payout. But, you know, that's on a lighter note. But I think at these valuations, if you're going to get similar growth rates across the sector, let's take, again, just coming back to ID services, I think on a blended basis, the sector is going to grow 8%. You will have TCS probably growing at 9-10 and the others growing at 5-6. Right, but if you're comfortable with the kind of capital allocation and promoter and dividend payout that TCS has, I think the trade may just come back to something like a Titan over the others, and that may just correct itself.
So given all that you know right now about the markets, the valuations, the liquidity, etc., where do you put your money?
So the first thing is I don't know anything about the market, and I don't think too many of us know, but I think you really have to find value where and it's difficult to. I'll give you some stocks like, let's say, Surbhi alluded to Bajaj. I think, you know, if you look at trailing, Bajaj is coming at what, 3.3 times. It's not listing cheap, you know, but then you'll obviously have a good, you know, listing gain. But you can look at names like Repco Home Finance. I think that's still coming at 0.7 times price to book. That looks interesting.
Bajaj, by the way, it's going to be a doubler on
for
listing.
Sure it will be. For sure.
So then valuations are
6.6.
at what, where?
So if you look at what Bajaj Finance is traded at,
Which is what someone said, it has to be at
you know,
least 8
or
times.
Gru Finance at one point, Gru was trading at 7 times price to book. You know, of course, Gru has never diluted. You know, and that's
but
the
I think that era is over, isn't it?
It is, but
5 times, 6 times.
Of course it is, but I think that is probably what will happen, right? Bajaj will list. It'll probably list at, you know, maybe 1.5, 2x the issue price. The question is going to be then what? I think even on a post-diluted basis, I was just speaking to my analyst, I think she was saying it's coming at somewhere around 2.5 or 2.7 times. So even if it doubles, you're talking about 4.5, 5 times straight there. HDFC, any of the stocks that you take, whether it's HDFC Life, price to embedded value is about 2.4 times. If you take the parent, which is the merged entity, that's coming at about 2.3 times. These are all traded at 4.5, 5 times. So, you know, I mean, even if you have a 25-30% growth rate, we've discussed this in the past, Prashant. Bajaj Finance, DMart, Asian Paints, these guys get so priced to perfection that margin for error bilkul nahi hota. You know, thoda bhi agar, if you're 30% growth rate and you come in at 26%, you'll find the stock down 10% because you're pricing these for perfection. And I think that's the same thing happening with Bajaj. But I think in BFSI, like I was saying, I think Repco is a good trade. We were discussing, you know, we alluded to jewelries. I think Muthoot is still a good trade. And, you know, with all that's happening in housing, I don't know whether it's a name that you guys discuss often. We like Housing Urban Development Company, HUDCO. You know, coming at about very similar valuations to, say, a Bajaj Finance right now, but 25-30% kind of growth rates. There is some pockets of value still in cement. If you look at the valuation differential, again, going back to the point you were making, Ambuja is still trading at a discount to Ultratech. JK Lakshmi is still trading at a discount to some of the larger peers. Chemicals has been out of flavor for a while. I think, you know, you've had a great run in fluorination with SRF and Naveen. We like oleochemicals as a space, so Galaxy Surfactants could be an interesting name. So it's not like there is no value whatsoever. I think the only place where you're going to absolutely struggle from a valuation perspective is consumer, because those valuations have been very good over the last few months. And I think if you look at QSR, Alcobev, Staples, any discretionary hotels, it's very difficult to justify. So I think if you get, like, you know, a little over fixed deposit returns, like 8-10% kind of compounded returns, you should be happy. But I think some pockets of the market still have some amount, but you can't just aggregate, say that, you know, this is where it is. That's the sort of limited point.
It's not an easy market to be in. You have to really dig deep to find little pockets of value wherever they exist. Got that point, Rahul. Thanks very much. Good to have you in the studios this morning. Thank you very much for being with us and sharing the perspective there.
Thank you.
Well, we have to move on and get to our next corporate conversation. And the company on our radar is actually Thermax. Now, Thermax has entered into a strategic collaboration with Cirrus Power for manufacturing of electrolyzers. To discuss all the details around this development, the opportunity, the outlook, we have with us Ashish Bhandari, MD and CEO of Thermax. Mr. Bhandari, good morning. Great to have you with us on the show. So let's start with all the bare basics. This is a big alignment that's happened. So how does it work? What's the tech transfer, the royalty, the revenue share, and the opportunity itself? Just break it down. Where will it place Thermax in the entire electrolyzer ecosystem?
Okay, I'll answer it in three parts. First is the choice of technology itself. Thermax has chosen to go with solid oxide as the core technology around which we would do our development. And we have preferred it over a couple of the competing technologies like alkaline and PEM, because we think for India's industries where decarbonization through hydrogen will happen first, which is fertilizer, steel, refining, and petrochemical. In these industries, the application for SOEC as a technology is very high. And that is because there is a high heat requirement for this technology, which has the capability to deliver much higher efficiency than other technologies. So that is the choice that Thermax has made. It aligns very well with our strengths. And because we are at the core a company that understands heat management very, very well. So that is the idea. Second, it's a licensing arrangement where some of the core technology elements will be provided to us by Cirrus Power. It's a non-exclusive global license. So I'll talk about both the words. It's non-exclusive, which means the license that is given to Thermax can be given to others. And we are comfortable with that. We think we can develop products that are competitive and can stand on their own. More importantly, in our mind, it's a global license, which means it's not limited to India. We can take our products that we develop and we can sell it anywhere, everywhere. Third, in terms of the terms, what we are comfortable sharing is of course, there's a fee to the license and everything else. There's a very direct and a very specific technology agreement, which means Thermax will obtain technology with very specific agreed upon technology capabilities around which we will develop all our products and everything else. There is a royalty. The royalty terms are reasonable in our account, not shareable at this current moment. What we will result in is a prototype development over the next 1 year, followed by manufacturing plant, and then after that, much bigger, wider scale deployment.
Right. The street likes what you're saying. It's, in terms of the opportunity, the terms of the deal that you have, and the business plan that you have. If you could give us some more details on this, if you could give us a sense of what the total addressable market is, when do you start bidding for electrolyzers, and what could this be in terms of potential revenue and margins for a company like you going forward?
Look, I'll share what we know. Yeah, and there is a lot in this space that we don't know. What we don't know is how the space will evolve, because there are a lot of policy-related discussions. Also, in terms of choice of technology, we have made our choice of technology, but we know there are other competing technologies, and especially there is the load of players out of China where the price points are just very difficult to determine what they are today and what they will be in the future. So there are some geopolitical ramifications as well. And third is adoption. Yeah, so of hydrogen overall, not just about SOEC, about hydrogen overall. So there are a lot of moving parts, but not doing anything is clearly not an option either. Yeah, so which is why we have chosen our path. So with that said, broadly, what I think, and we'll have to take a longer look. If you look at 2030, I suspect the market for electrolyzers in India will be a few $1 billion. Yeah, and in that, how big will SOEC be? What Thermax's share would be remains to be seen. Even profitability will be driven by competitiveness, but I hope at least 10 to 20% market share should not be should not be something we cannot aspire for. Yeah,
Okay,
but there are a lot of
Ashish.
moving parts.
Okay, no, absolutely, and I think you described it so well. Congratulations on this sort of new segment. Thank you for joining us, Ashish. If I can ask you to, so you said billions of dollars, roughly, was that? Is it?
So it could
more
be
specific?
anywhere.
Yeah.
I think my personal number of what the size of the market would be somewhere between $2 to $5 billion. Yeah, that
Okay,
is
so
very wide range, you would say. And I would say there are just too many open questions right now, even to come up with any number. I think the focus should be on what we can work on and deliver.
yeah, so
and if we do that right, the market
just to
will come.
so just to narrow the focus the mind a little bit more. I know this is all projections, and I think our viewers understand that as well. And you made it amply clear there are lots of variables and moving parts. So if it's, say, for example, $3 billion, right, by 2030, you're saying you should be able to get a 20% share of the market, right? That's about $600 million.
Yeah, I don't think that's. Go ahead. Sorry, please.
And what kind of rough margins, again, all projections?
All projections, yeah, absolutely. Very little idea on what it would mean.
Okay.
I think, look, you start with fundamentals of what the world of the future needs, and you're very clear hydrogen is going to be a big part.
Ashish, if I can ask, got it.
Please.
Let me just ask you two more questions. Does
Please.
anyone make electrolyzers here in India right now? That is one.
Right
I think, is it all imported?
Right now, predominantly imported, in a segment which is very, very small. As you know, as part of PLIs, there are a few companies who have committed to making electrolyzers in India over the next 3 years. Not one of them is based on SOEC technology.
So, since we don't have immediate numbers to work with in the here and now, Mr. Bhandari, I want to go back to just understanding this. Like you said, the opportunity size could be $3 to $5 billion. That's the green hydrogen opportunity in India, right, that we're talking about up until 2030. What gives you the confidence that this particular technology that you have opted for, SOEC, that this will win more of the market share? And just give us some time to market that you have in mind. By when will the technology transfer happen? When will your plants come up? And by when do you actually hit the ground?
Okay, let me take both of those questions separately. First, in terms of why we think this is the technology to work with, I'll repeat, it is very well suited for the kinds of industries that India looks to decarbonize. Yeah? And I shared my steel, fertilizers, refining, and petrochemicals. Those are the four primary industries. And the reason for that is the SOEC delivers much higher efficiency, but trades that off with higher capex requirement, and especially requirement for heat. And in these bigger process applications, heat is available. And two, Thermax is very well versed in how do you optimize heat in a process and in an equipment. So that is where our capability comes in. We think it's a very good fit for what India needs and what Thermax can do well. Yeah, that is the primary driver.
Yeah, and by when? Yeah, and by when will your plans be up and running? Yeah.
Look, in terms of, the technology transfer is immediate. Yeah, we are getting started running on the ground immediately. When would products be available for? I wouldn't say we'd have to wait 2 years for the first products to become available, and 3 years for a full-scale plant to be available.
Right. And finally, before we let you go, since we have you with us, if you could give us a sense on the non-electrolyzer, the current part of your business, how execution has been in the second quarter so far, order inflows, margins were a little under pressure. Have you seen some bottoming out there? How does the next couple of quarters look for you?
Look, I continue to stay optimistic. I don't think it's, I think maybe 2 years ago, right after COVID, there was a period where orders were just coming in. We are not in that phase anymore. There's a lot of opportunity, but you have to fight for it, and you have to be doing new things, which is what we think we are, even beyond hydrogen in almost every part of the business. So overall, optimistic, and that Q1 was on the margin side. We took some hits, and hopefully that's the end of it, given we are just 10 days to or very close to finishing the the quarter overall. Too early to start predicting and not right to predict, but overall optimistic about what the future holds.
All right. Ashish, we'll leave it there. Good conversation. Thank you very much and good luck as you sort of build that side of the business out over the next couple of years or so. And of course, we'll speak after you have, you report the numbers for the quarter, as you said. We're very close to finishing it. Well, let's focus on the next one. Nazara Technologies is the company that we're going to talk about. Now, Nazara is investing 982 crores in Moonshine Tech, which owns online poker gaming platform PokerBaazi. And we're going to talk more about this. We have Nitish Mittersen, a Joint Managing Director and CEO at Nazara, joining us now. Nitish, good morning. Great to have you with us here on CNBC-TV18. Thank you for your time. I dare say the buzz or the vibe overall is waging a bet, be it in poker or be it in the stock market. So I think the acquisition is in tune with the times in that sense. But congratulations. I think it's the largest acquisition for you so far, by far, right? So tell us a little bit about this. How much cash are you putting to work? Because there is a... Oh, oops. I think
For the longest time, we thought he had a poker face. Little did we know that it was the connection which was making it
That's a good
the way
one.
he was. What can one say? We'll just try and repatch that connection. But big acquisition, 1,000 crores.
And the point, Mangalam, they've done acquisitions,
Yes.
small acquisitions, like 150, 200 crores.
Right.
I mean, actually, last time I spoke with them, I said, well, it's almost an acquisition a week.
Yeah.
That's the pace of these small acquisitions they've done. But this is, as Rima earlier said, I think the revenues of the company are about 450 crores.
Yeah.
So that's about 40% of what the annual revenues right now are. And this, of course, also takes away a significant portion of the cash on the books.
Yeah.
So I think there's a lot to talk about. But as soon as we have, a stable line with Nitish.
What's also interesting
with us,
is that earlier, real money gaming accounted for sub 10% of their overall revenues. Now with this being added and this accounting for nearly 35% of their overall consolidated revenues, what does that do to the overall, mix of the business? And in light of the sort of regulatory issues that are surrounding the real money gaming issues, how does the company navigate through all of this? Something we'll be watching out for.
I guess in the past, Nitish has always maintained that as long as there's absolute clarity and certainty and stability on the tax rate, even if it is 28% GST, I think players will learn to live with it and move on. And maybe that's the premise on which they've gone ahead and decided to deploy almost 1,000 crores towards this particular acquisition, like big one, like you said, 982 crores to be precise.
I can tell you, poker is, I don't know, you guys play poker? I don't. I mean, I've been asked to learn and almost coerced into learning. Maybe I will get there, but people who play,
Big fans.
They play through the night and wake up in the morning and go to work, and it's serious out there, and large amounts of money being bet. And I'm talking about sort of people like you and me.
Yeah, the age-old saying is that if you want to know the character of a person, play poker with that person. Because given the sort of skill that is required for you to, calculate probabilities, there are tells, and then there are, the way a person plays, whether he's aggressive or bluffing through their eyes. All of that, you get to know a person really well when you play poker with them.
I played once and I won. I think
That's called beginner's luck.
Beginner's luck.
Exactly. So that's why I've not tried my luck the second time.
All right, and talking about beginner's luck, I think we have Nitish back with us as well. Yes,
let's,
do we?
Let's welcome in Nitish now. Nitish, hi, good morning. And I think the line was frozen earlier, and we were making the joke that you got a poker face on, but that was clearly a bad line. So let me begin again. Congratulations, big acquisition. I think the biggest that you've done by far. Talk to us a little bit about the mechanics of the deal. This will drain out a substantial amount of cash that you had. It'll leave you with very little cash. How are you sort of funding this? Will you look to raise more money? And then we'll actually talk about what you've acquired and the prospects there. Go on.
Sure. Prashant, as you know, Nazara had raised, significant cash in the last year. And we have been selectively making acquisitions where we think will add significant scale, growth, and profitability to our platform going forward. We've been quite patient about it, built a very strong deal pipeline, and have got a lot more active in our M&A in the current year, I would say, in FY25. I think with this current PokerBaazi transaction, They are the market leaders by far, over 55% market share, a fantastic team, and significant growth. We put out some numbers, and you can see how they are growing. So we think it's the right bet for us to take. We are very excited about it. In terms of cash reserves, we continue to be well funded. We are a cash flow positive company generating free cash flow every year, and we will continue to be acquisitive, in opportunities that we like. We may raise some additional primary capital as and when we require it.
So could you tell us before this transaction, because you did 2 other acquisitions before this, right, in quick succession.
Yes.
So how much cash was there before this acquisition? After you pay this out, how much will be left? So you're paying out about 700 crores in cash for this, right? How much cash will be left in the books? And you said you may do another round of fundraising.
Yes.
I mean, the size and what's on your mind, and will it be very soon?
So we had 1,400 crores of cash on our books. Post the recent acquisitions of the Kidopia stake and the Fusebox UK studio, we had approximately 900 crores left. So we can fully fund this on our own steam, but we will also, look at getting some good investors on board. This is a good opportunity for that. And in the coming days and weeks, hopefully we will be able to achieve that.
And that
So
will
can
be
you
a fresh
elaborate?
issue of shares, Nitish?
Yeah. Yes.
So can you give us some sense on, let's say if you're going to go the QIP way, what is the kind of equity dilution you're looking at? How much would you want to raise by way of fresh equity capital?
So we haven't decided the route we will take, nor the amount, but we will partly fund this transaction that we are going to, pay out for.
Okay, so when you say partly, does that mean 50%, 60, 70%? We're just trying to get to some rough, estimates in size here.
We're still evaluating it. Our board will review the options, so we still don't know the right amount.
Okay.
All right, so let's talk about the here and now, Nitish. After this, deal that happens and post-conversion of your preference shares, what will be the stake that you will hold in Moonshine immediately? And post that, what are the plans for increasing stake further?
So right now, we will hold about 48% stake. This is excluding the 150 crores primary capital that we are putting in as CCPS, which we will trigger a conversion at a future date as and when we want to. So the CCPS will get converted at a future date at a formula as is linked to future revenue, and therefore I can't give the exact post-conversion percentage right now, but it should get us closer to the majority stake in the company.
So at 48%, of course, it will not be part of the consolidated numbers. It'll just come as an associate or a little more than that. Is it
You're
a
right.
plug-and-play model? It's about 40% of your revenues. What are the kind of synergies that you believe you can attract from or achieve from a business like this, and margin improvement as well?
I think there are a lot of synergies. It's a consumer-facing product. We already spend a lot of time in marketing and a lot of ad dollars, so there could be economies of scale. Our esports division is very strong, and there could be synergies with Nordwind Gaming. So I think our team has worked out several synergies, but I think on a standalone business, this is in itself a very strong standalone business, growing very fast. And therefore, we are not going to rush into synergies today. We want to just support this business and scale it in the next 2-3 years, and softly
Nitish,
look at that we go along.
Nitish, what could be, how large is the market as such? And how large can this business become, in your opinion? I mean, now that becomes a bit of a projection, but what's your sense?
I think the skill-based online gaming market in India has been growing very fast, as can also be seen in the recent GST Council meeting outcome. The tax collected by online gaming has significantly increased. I saw it was about 400% increase to almost 7,000 crores in the last 6 months. So as you can see, this industry is growing extremely fast and will continue to grow as more and more people come online, more and more people are digital, right? This is the new world we live in. And I think the tailwinds are very strong for this business.
No, absolutely. That point is well taken. And I think this was discussed even before the GST meet that just concluded. The kind of revenue collection that the government is managing, because the market seems to have digested it, the reality of 28% GST on real money gaming. So Nitish, now just give us your targeted business mix in terms of the strategy going forward. How much is going to be real money gaming with this acquisition? And To what extent do you want to scale it up to? And then the other segments as well. I mean, there's still sports, there is the gamified learning. So in terms of the verticals and real money gaming itself, the focus going forward on this segment.
So for us, the core gaming business, which is, game studios that we own and develop games, for example, Fusebox or Kidopia or World Cricket Championship, remains a very strong core focus for us. And this will continue to grow. We will continue to be acquisitive in that space and also continue to be a high margin driver and cash flow driver for us in the coming years. So I think from a Nazara perspective, we are going to continue to focus very strongly on core gaming. We have the esports business, which we believe is also, we are the market leaders in that space through Nodwin Gaming and Sportskeeda. And again, it's a business with very strong tailwinds because that's what the youth really wants today. And we will continue to dominate that space and grow in the next 2-3 years. On the skill-based real money gaming space, one point to notice at this point of time with a 48% stake, we are not going to be consolidating revenues of this company. So it will remain an associate in our books and therefore will not have a direct revenue contribution to the business for the time being.
But eventually you're taking your stake above 51%, right? So I mean, when that happens, and just tell us if that's going to happen, maybe not in FY25, maybe in FY26, then on a consolidated basis, what's the exposure to real money gaming?
Once we consolidate, it may increase to 15-20%, but I don't have exact maths right now because these are moving targets, right? Our other businesses are also growing and we don't know at exactly what time we will consolidate if we do consolidate. So I think we will have to see how it plays out in the coming years.
Just a final question before we let you go. Last year, this business grew at around 54% with margins at around 10% on an organic basis. What's the projected growth rate here? And you said you won't rush into driving synergies, but maybe at some point, you could give us a number in terms of the scalability or the cost savings that can take place because of these synergies. So on a steady state basis, what is the growth rate that you can project for this business and how much can be the synergies that you would add?
I think PokerBaazi is investing very aggressively in brand building, and therefore you will continue to see strong growth in the coming years as we report numbers for them as an associate. So I think we will continue to see very good numbers there. In terms of synergies, like I said, there are multiple synergies. Hopefully they will help increase EBITDA margins. In the longer term, I think this is a business that can generate very high EBITDA margins, but we have to kind of, optimize. For example, in recent year, the GST costs have gone up by almost 400%. So we will have to scale the business to be able to extract, higher EBITDA margins.
Okay. All right. I know this is a projection, Ritesh, but 2 years down the line, what kind of top line can we look at?
I really am not in a position to give a guidance right now on that.
Okay, all right. Maybe another time. Nitish, thank you very much. Good having you with us here. Appreciate you joining in. With Perspective stocks, by the way, moved into the green, but only slightly so, about 0.5% plus higher at this point. We'll take a break. We are back. More coming up on the other side.
Welcome back. The mid-cap index still holding up with gains of almost 0.5%. Briefly, there was a dip on the Nifty Bank, which was bought into, and there has been sold into once again. So the Nifty Bank now sitting with a cut of 75 points. The Nifty 2, lower by about 0.25%, was doing well. We have the metals and the IT pack. Both of them well bid in today's trading session. Tata Steel has moved higher by about 2%. And we have Wipro as well, sitting with a gain of about 3%. Good time to get in Mitesh Thakkar for his views at 10. Mitesh, the first 45 minutes of trade are up. Your thoughts on how it's panned out so far and what one should do?
So, we are kind of slightly down, but that doesn't worry me. It just looks like, that yesterday's late surge, which happened in the second half, I think looks like a mild pullback to that. The Nifty is sustaining about 25, 280, 270 zone, which is where the closing pivot was when the last time it crossed 25, 300. So, pretty okay with that. And the Bank Nifty is hardly down by about 60, 70 points. Again, I would therefore maintain a positive bias. On the stock side, I have two long or buy calls. Bosch, I think, is breaking out today with good volumes. So buy here with a stop at 34,400. Look for targets of 35,700 to about 35,800. And the other one which I like is India Mart. Again, a stock which is coming to focus after some underperformance. So here I would keep a very tight stop at 31.24 and look for targets of 3,200 plus.
Okay, all right, got that, Mitesh. Thank you very much for the trades at 10. We'll now move on to a CNBC-TV18 exclusive. Trend plans to open 30 to 40 new West Side stores every year. In a rare conversation from the sidelines of the West Side Media Day with CNBC-TV18's Shilpa Ranipeta, the company's CEO and COO talk about expansion plans and demand trends ahead of the festive season.
The fact is, with the 200 plus stores that we have, at our current run rate, we get over 80 million walk-ins. So a significant proportion of it are actually young.
Right.
And so therefore, do we address that segment? 100%. Do we address only that segment? Not really. Okay. So we are focused on them in a different way, in the way compared to some of the other brands.
Right.
And we want to be able to appeal to a headset and a mindset and not just an age group.
Are we looking at new categories or new sort of product ranges? Because you spoke about a lot of things that are new.
Everything has to be new. We're in fashion, and fashion's about newness. And for us, it's newness every Friday.
Right.
And so you've got to keep coming back to find it. Yes, we have a gifting collection. Yes, we have a new resort collection, fragrance collections, new footwear collections, new sneakers. I mean, I could go on forever.
Right.
So everything is new for the season.
Right.
Because we've got to stay fresh, we've got to stay relevant, and we've got to appeal to Gen Z, as you said. Indian people are holidaying. So we're playing into what's relevant. If they're holidaying, we're going to give them things to holiday.
Right.
If they're traveling, we'll give them a leisure collection.
Right.
I think for us it's important to see what consumer trends are in India, and we satisfy that through our fashion offer.
Right, fair enough. And we'll talk about West Side also. Can you sort of give me a sense then, given the kind of consumer trends we're seeing, what can we expect from an expansion point of view, or what do you have lined up for the year?
So we said in the shareholders meeting, we're thinking about between 30 and 40 stores every year. We've consistently maintained that we will do stores that stand up to a certain minimum standard. We're thinking of stores which are at least 20,000 square feet and more, iconic, and make a difference to each customer that she can relate to in a particular micro market.
Right. And how much of these do you see in a tier 2, 3 markets? How big are those? Because we're seeing so much aspiration coming out of those markets, and retailers are now increasingly focusing on these smaller markets. Given the aspiration there, what's your sense? What are you planning for West Side there?
In many ways, West Side does not only appeal to Tier 1 markets. It's as relevant today in Tier 2 and Tier 3 markets. It's a question of whether we find critical mass, Shilpa, in a particular market, whether we find the right location, whether we find the right building scheme, and the economics work. If some of this come together, we're very happy, and actually very happy to be in multiple micro markets rather than lesser number of micro markets.
Right. So that is an area that, I mean, Tier 2, 3 markets are something that you are looking at.
Indeed.
Right.
We already have several cities where we are present, towns which we are exploring. So it's something which is clearly on the radar, but it is not in exclusion of what we do in Tier 1.
Of course, fair enough. And what about online for West Side? The West Side store also standalone. You do how much of a focus do you have on that end? And currently, can you give me a sense of how well is the online store doing for you for West Side overall?
Westside we've been reporting consistently that it's been contributing about 4 to 5% of our revenues on a quarterly basis. And online continues to be a very important channel to deliver convenience to our customers. It is not about being transactional, so we are not really interested in discount promos, offers, coupons, that kind of push to sell. It is about convenience, and to that extent, to the customer who resonates with the Westside offer, all that Shailina talked about, we want to be able to say, listen, we are available online.
Right.
And in doing that, we again differentiated because we don't do any marketplaces. Again, a choice, matter of discipline. We do it only through westside.com or our app or on Tata Click. So we're just essentially listing on our own platforms.
But I would add to that that as a brand, the aspiration of the online shop is as beautiful, is as considered, is as special as walking in a store. And the ease of shopping and the convenience. So we bring fashion to life with photography and with a vibe online. And I think we want to be an omni business where a customer can just transition from online to store and just resonate and connect with Westside at every level.
Is the Westside brand going to be the online amongst the universe of brands that you have under Trend?
Oh, absolutely. I guess Westside is going to be the brand which is going to be online.
Right.
And it is a choice that's for the brand that we made, and we will stay with it, Shilpa.
Fair enough. You spoke about the expansion of Westside also. Sort of brings me to the question, will you look at the overseas markets also for Westside eventually? Is that something that you would like to do for Westside?
We're very committed to India, Shilpa, at this moment in time. And India is a very interesting market and has a lot of growth opportunity. That said, I don't think so there is anything which stops us from exploring it in due course.
Right, a rare conversation with the management of Trent, which will be a Nifty entrant come September 30th. And the management quite gung-ho on the possibilities of Westside. The street quite gung-ho on the possibilities of Zudio itself. The stock up 0.75%, but that's just about today. Look at it over the last many years and you'd see the kind of wealth creator that this one has been. Take a short break. Come back. On the other side, we have Manisha Gupta, as always, joining in with all things commodities. Stay tuned.
All right, welcome back. This market, of course, doing a little bit of a down move, nothing major at all. 50-odd points down, 25,337, which is, by the way, around the last all-time high. Yesterday, of course, we made a fresh one. What's top of mind as far as commodities go? Manisha is here with that. Manisha, morning.
Thank you for that, Prashant. Well, top of mind is absolutely gold. I could do a bit of a song and dance on that. The way the markets have moved on to this one, 2% of gains in the overnight markets, and we're trading above $25-60 an ounce. Well, that is what the gold prices have done, actually. It's traded 4% up in the last 1 month, 34% up when you look at as compared to in last 12 months. And for the year, we are up 22% as well. So it has been good going. And the important point is that this gold prices are gaining, even as various other asset classes also seem to be surging higher. Well, when you look at the way the prices have moved, this is also coming on the back of ECB cutting interest rates by 25 basis points yesterday. This has been a second time. The last time ECB cut rates was the month of June. So July, nothing happened. August, none as well. And then we've seen happen it in September. The markets also are looking at the US Fed rate cut estimates for the next week. 25 basis points is now an 87% probability and a 13% chance of a 50 basis point rate cut as well. But the markets clearly are reacting to the US unemployment data, which has seen a rise. The overall inflation seems to have eased. So the market's clearly reacting to that as well. And it is not just the US Fed meeting. You have Bank of England and Bank of Japan monetary policy meetings as well in the next week. And then the buying has been very strong from investors, HNIs, hedge funds, money managers. Net longs now stand at a 5-year highs. So that tells you the kind of interest the markets have on gold right now. Well, also all the profit taking, all the corrections that we've seen in case of gold have been very shallow, and gold has seen buying on every dip in the last couple of years or so. This is what we've done in sense of prices in this year itself. So the low was at 1992, and from those kind of levels, and this was the kind of level that we saw in the month of Feb. Since then, we've seen prices continue to gain up, trading at 25.60 right now. The year started with 2,058. So from those kind of levels as well, we are more than $500 up for the year for the gold prices. Now, going forward as well, the expectation is that you could be looking at higher highs from here. This is the gold outlook forecast that I've collated from various reports there. Citi believes 2,500 of an average for this year. Wisdom Tree talks about 2,585. JP Morgan also believes that 2,500 of an average is where the gold prices will be for the fourth quarter as well. And then you have Bank of America talking about 3,000. This is for 2025. Goldman Sachs talks about 2,700 as well, and this is for next year as well. And you also have similar kind of reports coming in from various other parties which are talking about levels of anywhere between 2,700. That is what Metal Focus tells us. So 2,700 to 3,000 really seems to be the range for the next year. And most of these banks and brokerages also believe that not just 2024, but 25, 26, and until 2027, they are quite bullish.
All right, Manisha, thank you very much for that. Well, let's take a quick commercial break here. We're going to come back with our segment. It's the economy. Lata will get chatting with two big bank treasury heads, Neeraj Gambhir of Axis Bank and B. Prasanna of ICICI Bank, for some money market talk. Stay with us.
crash in crude prices and in many global goods prices due to Chinese exports, Reserve Bank's new liquidity rules requiring higher purchase of bonds, India's bond index inclusion are all very positive news for Indian bonds. So where are bond yields headed? Is 6% yield possible sometime in 2025? Likewise, given the dollar flows and the falling inflation rate differential between India and US, can the rupee appreciate over the next 12 months? These are the two seminal questions we are asking managers of two of the largest bank treasuries in India, B. Prasanna of ICICI Bank and Neeraj Gambhir of Axis Bank. Gentlemen, good morning and thank you very much for your time. These are very, very crucial questions. Prasanna, first, let me get the immediate out of the way. Yesterday's CPI number coming in a little higher than expected. We were building to some kind of a RBI softness expectation, bond yields going to 6.8. All that out of the way, is it a status quo or are you still expecting dovishness?
So, Lata, I think, yesterday's CPI inflation was a little disappointing. I mean, had it come to where we were all expecting, it would have been much better and the narrative would have been solidified. But at the same time, I also think that we never expected RBI to change stance very soon in October. And we were of the view that the earliest they would probably do is probably a change in stance in December, followed by a rate cut in February. So to that extent, I don't really think that it changes the narrative from our side, because if you really look at the overall, the fundamental factors that are driving our expectations from where it is, most of it seems to be in place with a very favorable global backdrop, oil coming down, expected inflation coming down, and, goods inflation, like you spoke about with the Chinese growth where it is. So I think the narrative is building up. Maybe it is now slows down a little bit and some kind of a reality check that maybe not in October. But I must say that markets were anyway not factoring in a rate cut in October. I mean, it's more like a more dovish talk, which I still feel is kind of possible.
Oh, still kind of possible. Okay, that's important. Neeraj, what would be your spin in the near term? There was a lot of expectation, at least I heard in the market, that a softness of the Reserve Bank in October itself is possible, partly because of the debate stirred by the chief economic advisor questioning inflation targeting. And then, of course, good monsoon, crude crashing below $70. So are you expecting an earlier softness from the Reserve Bank than you thought before? Like probably December rate cut?
I think December rate cut looks a bit too aggressive call at this point in time. I think a change of stance in December is something which can be thought of, provided the inflation data in September, October and November is on the softer side than expected. The underlying inflation trend continues to be very soft. Core inflation is soft. I think what is spoiling the party is the vegetable prices. So if we see over the next 3 months that overall inflation, headline inflation numbers are somewhat softer than what RBI has forecasted, I think there is a possibility that we might see a change in the stance in the month of December. I'm not expecting a rate cut as yet. I think we still are in a situation where the headline inflation is quite above the target and is not expected to get to the target, at least in this financial year. Growth continues to hold up well, even though there is some softness that is creeping in. So all in all, I think still not at a stage where we can start calling out for rate cuts. But yeah, some change in the tone and tenor of the language can be expected in December.
Okay, let me move from RBI rate cuts to the market yield, which is a different story altogether. RBI has not done anything by way of rate cuts, but yields have fallen from almost 7.2 to 6.8. Of course, they've changed their liquidity. Prasanna, what's your sense in terms of yields? I'm asking you for the better part of 2025, calendar 2025. Your bond inclusion, LCR purchases, all that will start. And the estimate of LCR purchase also I would want from you. And therefore, what happens to bond yields?
So I think, Lata, beyond what we think the RBI is doing, like you rightly said, the market has gone ahead with a lot of other expectations. And if you really look at the number of factors that are responsible for this favorable outlook on bonds, first is the global backdrop. which is clearly getting more and more dovish as we head towards the Fed policy. In fact, today morning, there was an article in the WSJ which is kind of indicating that even now it is quite possible that the Fed might do 50 basis points. So those kind of, I mean, it's pretty clear that the Fed chair is favoring 50, but then he has to take the committee with him. And so it's a close call between 25 and 50. So that's one. Second thing is the fact that the Q2 inflation is also going to be 30 to 40 basis points lower than RBI's estimate. The third is the fact that our external situation, the CAD and the BOP, which was anyway already looking quite positive, now got a little bit more positive because of the fact that oil prices have been coming down. And like you rightly pointed out, liquidity, which is one of the reasons why it was kind of creating a roadblock for bonds to rally in the early part of the year. RBI has consciously been letting more money into the system. The government is also consciously, I think, running down its WMA balances, which is one of the reasons why liquidity was tight, either by way of more spending or by way of reducing their borrowing. And then finally, the demand-supply balance, which is like you again said about the LCR, the FPI buying, and all the financial savings which is flowing into long-term funds. So I think all in all, it is a quite favorable environment for bond markets. And that is one of the reasons why we have seen the yields fall down. And as we go towards the calendar year end, I would see a slow grind lower. I wouldn't say something like 6% is possible, but obviously something like a 665 kind of a level is definitely possible as we go towards
25% now. 25% now. In 25, do we see 6?
Oh, in calendar year 25. No, even then, Lata, I think you need to have a view of repo rate at 5.5 if you have to believe 6% on the 10-year is possible. So I still feel, we feel that our base case is for a 6% repo, in which case you can justify a 6-quarter 2-year yield and a 6.5 kind of a 10-year yield. But 575 has opened up, so it's in a probability right now. But I think we need, like Neeraj said, we need more data in the next 2 or 3 months for us to, solidify that view that a larger rate cut is possible in this.
Okay, a quicker answer from you, Neeraj. Where do you see the 10-year in 2025? I heard 6. That's why I'm asking you.
Yeah, I'll be much more briefer than Prasanna because he's covered everything. I'll say that for me, it's difficult to think about anything lesser than 6.5 at this point in time for 2025, because unless and until we have a clear view around rate cuts in the calendar 2025, I think it's difficult to imagine a 10-year bond yield lower than, repo rate plus some spread. At the moment, repo rate is 6.5. If you imagine that maybe 25 to 50 basis point rate cuts likely, then, maybe 6.5 is where the market would anchor 10-year at this point in time. And this is a slightly longer term view, subject to all the caveats about data and, a whole lot of other things falling in place.
Okay. So a 575 repo can mean a 6% bond, 10-year bond, because right now, look at the difference. It is 6.5 repo and 6.8 10-year. There's only 30 basis. So if the demand keeps...
If I may comment on that, I think the behavior of the yield curve in terms of its shape is very different at different stages of the cycle. Yeah. We are currently at the beginning of a potential rate cutting cycle, and therefore the yield curve is flat. But as you get through a few rate cuts, the curve may not stay as flat, and some steepness would be required to creep in.
It's maybe a little more, I completely take your point, but there's also the juncture that India is in terms of index inclusion, in terms of the narrowing differentials, which brings me to the rupee, Prasanna. Is there a gentle appreciation possible? We saw it once in 2008, if you remember. We came all the way from 45 to even 39 to the dollar by the time the fund flows were all in. And then, of course, the crash started. Do you think a year of appreciation is possible, 2025?
I think, Lata, the best person to answer this question is obviously going to be the governor and the Reserve Bank of India, because they are the biggest, that's one part. But if you have to look at just the market forces, I would tend to agree that with interest rates falling in the US, this time around, I definitely think that it's going to help emerging market currencies with FPI flows, equity and debt flowing more into emerging markets. And hence, India will also get the benefit of that. And in addition to that, like I was briefly pointing out about the macros, with most of the macros being where it is very positive, I think you can make a case for an appreciating, INR. But considering that we seem to, the fact that RBI is quite aggressive in building up reserves whenever there are inflows. And, of course, intervening on the other side when there is depreciating pressure as well. But since they have been very aggressive in building up reserves, I also feel that what is happening to the yuan and what's happening to the other competing currencies from a trade perspective is something that the RBI will have a close watch on. And just to close the argument, I would say that even if the rupee were to depreciate, I think it will depreciate far lesser than what is priced into the forward market, which itself you can consider is something like an appreciation bias. So it's not that the spot rupee will have to appreciate, but even if it doesn't depreciate as much as what the interest rate differential warrants, that itself is something like an appreciation for the rupee.
You answered the question I was going to ask you, that, is the depreciation going to be far lower compared to the year that was and compared to last historical averages? Neeraj, a similar question. Actually, KV Kamath yesterday made a strong argument that rupee is on the cusp of appreciation. He compared India to the similar position that China was and Japan was in their own periods of explosive growth. But for the RBI, is an appreciation on the cards, Neeraj?
Well, RBI is the most important driver and the factor. So I say, but
macros. I meant macros.
Yeah, but for the RBI is a very hypothetical question. Is it possible? Is it possible? Answer is yes. Yes. Is it probable? I would think no. I would still think that the need to accumulate reserves, the need to build a very strong external war chest, the need to make sure that rupee stays competitive. Mind you that even after all this, the inflation differential between India and the West would be close to 2%, right? So we still need to see a depreciating currency to ensure that our purchasing power and our external competitiveness is maintained. So I do feel that even if the flows turn significantly positive and the current account is very well behaved as it has been, I think the depreciation bias will continue. Obviously, I don't expect the currency to depreciate in a meaningfully large way. I think it'll be about 2 to 2.5% annualized rate of depreciation. That should be good enough for us to actually maintain that level of competitiveness that we need to have. I would also argue that the desire to have a appreciating currency might look good on paper, but actually it's a disinflationary as well as demand destructing sort of story, right? So I think we should anticipate some kind of mild depreciation.
No, I certainly don't want an appreciating rupee, and I'm on RBI's side. But I just want to ask you questions about the market wants. Just 2 words, please, because I'm disobeying my studio director in terms of time. Prasanna, the rupee range and the 10-year lowest yield that you see in FY25. In 2025.
You mean calendar 25?
Yes.
So I think I would put 6/4 to 6/2, not lower than that for sure.
Okay.
And the rupee range would be 83.75 to 85 kind of levels. 84.75.
Neeraj, same question.
I think 84-85 on rupee, broadly that range. And 10-year, I see it going. I mean, it's very difficult for me to see it below 6.5 on a sustainable basis at current juncture.
All right. Thank you very much, gentlemen. I overshot time, but thank you very much for your answers. I have to take a break. Chartbusters is coming.
Bharti Hexacom surges more than 9% following a bullish note from Jefferies. The brokerage upgrades the stock to a buy, raises the target price to 1,600, citing the company would be the best play on tariff hikes.
Samvardhana Motherson comes under pressure yet again after brokerage firms Investec and Citi issue bearish calls. Citi issues a sell call citing weak demand. Investec downgrades the stock to a hold on weakness in the European markets.
Gold financiers Muthoot Finance and Manappuram shine higher by almost 4-5% each as gold prices hit a record high of nearly $2,600 an ounce.
Patanjali Foods has slipped nearly 4% after 3.3% equity worth over 2,200 crore rupees changed hands at nearly 1,900 rupees a share. Sources say that promoters Patanjali Ayurved and Patanjali Parivahan